Welcome, everybody, to our newest podcast for the Future of Insurance Industry Leaders. I'm really pleased today to have Chad Hersch, Vice President for Insurance, leading the L&A practice at Capgemini. Chad, welcome.
Thank you, Denise.
So, Chad, we've known each other for a long time, but, let's have you introduce yourself and give a little bit of background, because you've got a really kind of diverse background, and talk about what you've been doing around innovation at Capgemini.
Sure, and some might say we've known each other too long.
That's a little bit of that too, Chad.
So, as you all know, I spent my first few years out of college in IT and management consulting, pretty generically across industries. And I got into the insurance industry when I joined AIG American General, and I was the e-business director there across all the different distribution channels. And while I really liked having a bit of an impact on an insurer in that space, what I didn't like was that I was only having an impact on one insurer. And so I decided to become an industry analyst where I could try to impact the industry much more broadly and get the industry to focus on modernization. So I did that first at Celent for about 5 years. And I left there to help start Navarica, where I was for about 6 years, and left as a managing director at Navarica. For the entire 11 years, I was an industry analyst. I focused pretty heavily on core systems, emerging technologies, and generally getting insurers to realize that they needed to modernize. And that was great, except that, especially in the group space, the answer was so often, yes, you need to buy a new core system. No, there's not really one for you. A few years ago, I joined Majesco, decided to help build a platform for life and group insurers. So I headed up the global life business at Majesco for about 3 years. And one of the things I learned during my time at Majesco was, one, I could help build a modern platform that would help the industry. But I also learned that the services side of the industry was challenging because there were very few SIs focusing on life insurance and fewer still on the group side of the life business. I joined Capgemini about 2.5 years ago to help change that. We've since partnered with Majesco and are heavily focused on building out the L&A business, which at Capgemini is already pretty big, but we're looking to grow that even further, and that's my role here. I head up our life, annuities, pensions, group benefits, related aspects of the business for North America and UK here. Now, in terms of innovation, what I've found is that, for almost my entire career in insurance, I've tried to stay close to innovation in a bunch of different ways. Over the last few years, that's largely been advising and partnering with insurtechs, but also helping to solution innovative concepts for insurers, things like the Majesco platform, things like our open insurer platform here at Capgemini, and other types of solutions that help insurers get from where they are today to a flexible, agile, nimble place that they need to be in for the future.
I look back and I think, both of us came as industry analysts. We often joke about that, don't we, Chad? But it gave us a different kind of perspective on things. I think, that really provide, I think, some different kinds of insights. And I look back 5 years ago when InsurTech was first starting. Do you remember where it was about in early 2016, the first InsurTech conferences were starting and everybody was starting to talk about it. And it was like everything went dead quiet. Everybody was like pausing to try to figure out what this whole InsurTech thing meant, because Lemonade was coming out and, Root was coming out and a number of these different InsurTechs. And I think 5 years later, there's been a real positive impact for InsurTech into the industry to get us to kind of wake up and say, hey, things do need to change. Customers are expecting and demanding something more. What have you seen from an InsurTech standpoint, and what do you think the value has been to really kind of drive innovation in the industry, Chad?
So, the great thing about being an industry analyst is that you get to have a constant outside-in view. You get to be forward-thinking, but you still get to be cynical. And, I think that's actually valuable because so much of InsurTech, the early promise was really that it was going to turn insurance on its head. Today's carriers would be completely displaced, by startups and by greenfields, and agents were going to go away and be replaced with online distribution. And everything would be the direct model and so on. And if you think about what insurtechs have done to the industry, they've had a huge impact, but not really that way, right? So the magic of an insurtech isn't that a startup insurer is going to come eat a legacy player's lunch. It tends to be that it's a startup carrier that another insurer can buy. It's not a completely new distribution channel that replaces an existing distribution channel. It's often a new distribution channel that's in addition to the existing distribution channels. There are a lot of insurtechs doing a lot of different things, and together those pieces can have a large impact on a carrier's operations and technology. But it's not it's not a silver bullet. It's not a magic, a magic tool that carriers have to fix broken business processes. It's an arrow and a quiver, right? So insurers have to fix their business processes still. They still have to expand distribution channels. They still have to figure out how to deal with becoming customer centric. There's a lot of things they still have to do from an IT and operations perspective, but insurtech tools are helping them get there faster than ever before. And I think that's the magic of insurtech.
I couldn't agree with you more. And I think that perspective that you and I have, having been industry analysts, is that outside in perspective. I think that's what has really been a key learning for many insurers that insurtechs took. They took a customer view first rather than an internal view. So, as I think about other change over the last 3 to 5 years, particularly, we've seen a lot of change in the L&A market segment, for both individual products to group to benefits. Some of that was driven by some regulatory change that we all know about. And some of it's been driven by, new types of demographics with a younger generation in the workforce and a different set of expectations of the types of benefits that they want. And particularly prior to COVID-19, with a really hot market to try to attract talent, benefits have become a really powerful aspect of being able to pull people into companies. Give your perspective, because you've been involved inside an insurer and at a technology company and an industry analyst, and now at Capgemini from a services standpoint. Give your view of all of this.
Sure. I mean, look, the life industry has been grappling with, what to do to keep up with changes in technology and to keep up with changes in demographics and, outside competitors and things like that for decades, right? Unfortunately, because the life industry is so prone to external market forces, these changes have often been put off throughout the years, right? You had the financial crisis, you had the Great Recession, the aftermath of the Great Recession, 9/11, now COVID. So these changes tend to get put off for several years after these crises pass. And so very little progress got made over the years in modernizing life insurers. But what we tend to see nowadays is two things. One, individual life insurers are starting to figure out ways to work around conversion, whether that's putting in a greenfield platform, TPAing out certain blocks of business, taking a more pragmatic 80-20 conversion approach, selling off blocks of business, take your pick. And they're starting to really start to get a little bit of momentum in replacing core systems. On the group side, over the last few years, those employment growth numbers have been tremendous. A push towards voluntary benefits, which is sort of a no-cost way for employers to expand their benefits, and as you said, as in part to attract talent and in part to address changes in the healthcare market. You look at all these things that are driving insurers, and group insurers have suddenly become ripe for these changes as well. One of the interesting things, for lack of a better term, about this industry, there's very much a fast follower mentality. Nobody really wants to be first. Everybody really wants to be doing whatever the most successful guy is doing right ahead of them. And so when you see programs like MetLife Small Business Digital come to the market, other carriers start to feel the pressure. They know that it's going to be challenging to deal with a carrier that can provide straight through processing, auto adjudication of claims, rapid product development, rapid product enhancements, better underwriting data. So that tends to drive change probably more than anything else, is when one company does it well. We're working with carriers both tactically and strategically to help them transform both operations and technology. And one of the truisms is that you really can't typically fix the operations without fixing the technology. The way we've figured out how to best do that is we leverage a modern platform like Majesco as the sort of the heart of a full scale transformation, a business transformation, in order to address the fact that you really can't solve the business problems without solving the technology problems. And what I mean by that is, if you're going to solve a company's operations problems, they've got to be able to change their business processes flexibly. They've got to be able to build new insurance products that make sense for the market, not that can be shoehorned into their system. They need to be able to combine products. They need to be able to focus on customer needs, agent needs, not on what IT can and can't give them. And so by working with a platform like Majesco, we're able to help get them to a place where they can do those things and not be concerned about the technology. And in fact, one of the things that we've done is created an offering where we can use the Majesco platform in our TPA as part of a BPO option and so on, so that the insurer doesn't even need to think about the technology. They just have to worry about the products and the operations. And actually, we can even help them do the operations through our BPO and TPA. So, they can just worry about product and distribution, and we take care of the rest. And that's a kind of a shortcut to get to a transformation. But, broadly speaking, we also work with Majesco and other partners to make sure that we can address their technology needs, even if they're only using us for the technology needs. So in other words, say, for example, helping to implement Majesco or integrate Majesco would be a great example of that.
Yeah, I think you and I talked about this, for the L&A industry, having both of us come from the business side years ago. Today, because there's such a long tail and lots of history for some of the products and some of the policies that have been put on the platform decades ago, there's a lot of challenges there, and for companies to really figure out what kind of an insurance company are they going to be in the future, they got to kind of figure out what products and what markets they're really going to go after. And so, we're seeing in the marketplace some people selling some books of business because they're no longer really going to be focused on that. They're leveraging a BPO or a TPA to manage those policies in the business and customers they want to retain, but they want to do it much more cost effectively. And then on the other hand, they're also looking at creating a whole different operating model that has a different cost structure associated to it and different kinds of products for this kind of new generation. And so when you see all of that, there's really been a lot of, and particularly in group and voluntary benefits, there's been some really interesting and exciting things kind of happening on a product perspective and from an operating perspective. What do you see as the real strategic value for insurers to kind of look at those options and look at considering Majesco's core and our partnership together that can really kind of handle all kind of three, those different dimensions, both in operational innovation, but also a strategic innovation, Chad?
So I think there's two aspects to this. One is, the individual side, where conversion may be very cost prohibitive, and the carrier needs to look at alternatives to simply saying, we're going to put in a new platform and we're going to convert everything. Oftentimes that just is either too great a risk, too cost prohibitive, takes too long, take your pick of the challenges. And in those cases, it may make sense to convert about 80% of that business, but then 20% of it needs to be dealt with some other way. That could be something like a point in time conversion, but it could be something instead like turning that over to a TPA or a BPO that has a modern, flexible platform to sort of absorb any blocks of business that are challenging to convert. So there's that aspect on the individual side. On the group side, I'll actually come back to the individual again in a second, because there's another aspect of that that's key.
Sure.
But on the group side, launching new products tends to be a real challenge for insurers. They tend to have very old platforms on the group side, and new products are often driven by regulatory changes. So changes in Medicare, changes in the healthcare exchanges or other healthcare laws, changes to the broader economy, where sometimes employers want to compete for talent with new benefits. Sometimes they want to reduce their costs of benefits. So there's all kinds of macro factors that impact group. And the ability to launch a new product quickly and easily may be best served by a TPA or via a BPO option, where somebody like Capgemini, who's got a TPA and BPO capabilities, takes a modern platform like Majesco and gets that product out the door quickly with our operations, our combined IT with Majesco, and can have a platform and a product up and ready to run with both technology and operations in a matter of weeks, not years. And so, that's, I think, one of the key things that's been lacking in the market for a long time, because TPAs have historically used legacy platforms. BPO providers have typically insisted that you have a platform ready and waiting for them. So this combination that we've created together with Majesco is very, very potent, because it creates new opportunities in the market for an insurer. And, if you think about the options that have historically been available, it's things like ITO. Somebody comes in and takes over your platform. It's BPO. Somebody comes in and takes over your operations. It's TPA, where you go with the service provider's technology and operations. We've tried to break all this apart and create something much more flexible. You can do your operations with Capgemini. You can do your technology with Majesco, but then you can combine them. And that's a really key differentiator in the market, is that you can pick and choose all the parts that you want to manage yourself as an insurer, and let the rest be handled by folks that have a lot of experience doing that. So it really shortens the time to get a new product to market while decreasing the risk of that pretty dramatically, and still gives you a modern platform that you can then leverage for other products as you go forward.
In many ways, Chad, the options available for insurers today to finally address their legacy debt problem is pretty phenomenal, actually.
Yeah, it's a big change. And I think that one of the more exciting things that often gets overlooked, because we've had portals for years and years, in principle anyway, is that, yeah, sorry, website is not a portal.
Love that.
That cynical part of the analyst thing is still in me. So if you look at what carriers have done over the years with quote unquote portals, right? They've created websites that are partly transactional and have inquiry capabilities, but they're not really full-fledged portals the way we always talked about them being there. And so what's exciting for me is something like Majesco Digital First, that is truly microservices enabled, has some insurance capabilities built in, really shortens the timeline to get a portal up and running without sacrificing the things that a portal should do, right? Like incorporating other services into it. To me, that makes a huge difference in the ability to, say, wrap an existing legacy platform while you're doing these other things, whether that's implementing the platform, whether it's bringing on a TPA or BPO solution, and covering that up, covering the construction up, so that while the construction's going on, it still feels like the change has already been made from the customer side and the agent side. And when the work's done in the back end, it just works even better. So I think that's been another huge change.
I agree. And I think that it's just the start of change, because it's so much more than a portal. That's really laying down a foundation, and hopefully you've picked the right kind of solution to lay out that foundation, because you really need to expand beyond that. And when you kind of look at it from an L&A group and benefits and individual perspective, it's no longer about just having a portal or a mobile app that I can just kind of do a quote and a buy, or I can service, or I can do a first notice of loss, like, say, for example, if you had DI. But it's really about creating a broader customer experience. And it's really about wealth, health, and wellness. And how do you then, through a digital experience platform like a Digital First, be able to create a broader experience with APIs that link into different kinds of services, maybe discounts, maybe wellness credits, maybe rewards, all kinds of things that are going to really change people's lives in a much bigger way than just a portal. So if you're not thinking of that in that way, you're really going to miss out on where the industry, I think, is going and where customer expectations are going.
So yeah, I think customer experience is really underrated as a key aspect of where insurance is going. I think that if you think about the past, oh gosh, let's say 5 years or so, particularly on the life side, there's been a bit of a push and pull with the notion that the agent owns the customer, right? And so more and more insurers are moving to a direct or pseudo direct model in which, for simpler products, the agent may or may not be involved in the sales process, servicing of basic things like address changes and so on. So if you think about the change that needs to happen so fundamentally at an insurer in how they get to know their customers, there's this whole problem in the life space that oftentimes you don't engage with a customer for ages because people buy life insurance and they forget about it. And sometimes that's for the best for an insurer, right? Because they don't want the policy to lapse, and so sometimes bringing it to people's attention is not the best thing. Most people just put it on auto pay and forget about it for years. So if you think about how do you engage your customers so that you can make sure that those that you don't want to lapse don't lapse, and that those customers that are less profitable you're not spending your time on as much, and so on. That's something that's pretty new to this industry, and being able to engage with them digitally is arguably one of the best ways to be engaged with them, because that's what customers want primarily for most things. For things where they want a high touch, that's actually a great place for an agent. So to go to a point where you're customer centric, but without having to invest heavily in a customer facing channel like call centers and things like that, great digital capabilities are needed. Now, that's great, but if you don't also have a modern back end platform, that can also be disastrous, right? Used to tell a story. It's a little outdated now because it's on the P&C side, and this doesn't happen very much on the P&C side anymore. But I remember when I had a claim I needed to file for a broken windshield, and I was leaving town, going out of the country the next day, and so I tried to file it at about 1:00 in the morning, and I'd seen the carrier's commercials TV for years saying call, click, or connect. It doesn't matter which one. But I went on the website and it said, sorry, our website is closed from 1 a.m. to 5 a.m. for routine maintenance. And that's, if you have batch windows, that's pretty normal. I had another experience filing a claim with a different carrier where in the middle of a phone call on a Sunday afternoon, the claims adjuster basically said an expletive I won't repeat. And, and I said, what's going on? And she said, oh, I'm sorry, our system's just shut down for maintenance for the rest of the day. And she said, don't worry, I'll write down all your information and it'll get put in on Monday. And I thought, wow. That's something that just doesn't happen much in the modern world, right? So I think that the customer experience is a huge part of where carriers need to invest their time, effort, and money. And I think that we're starting to see that. I mean, we saw that for a long time on the P&C side, and it's there now. On the life side, that is definitely still an ongoing investment.
I couldn't agree more. As we kind of think about the future of insurance, how would you describe the future of insurance, Chad?
I think that it's going to be interesting, right? If you think about reinsurers as a category, right? Historically, they've been, behind the scenes underwriting risk, and that's been their role. Sometimes they provide guidelines and underwriting manuals, and sometimes even underwriting software to, I hate to say, enforce those models, but that's essentially what they were doing. But if you think about what they've been doing in the last few years, it's really quite different, although they continue to do that work. They've been testing the waters for a while now on how they can work around primary insurers. And this is really interesting because they're working with insurtechs to sort of underwrite the risks that insurtechs are when you get these startup carriers, oftentimes they're really all the underwriting and risk is being managed by a reinsurer. Some of the reinsurers have started their own primary insurance group or division, whatever you want to call it, like iptiQ from Swiss Re, for example.
Uh-huh.
And, you know, that's not a coincidence, right? What they've realized is they have all the data. They have all the information, better business. And when they look at the primary insurers that they work with, they have less control over the underwriting risk that they're taking on when they write it through a primary insurer. They don't get to market it. They don't get to, collect all of the data because they're limited to what the carriers are collecting. So this is an interesting model for them. And I think the most recent one that I've seen that's interesting is not with the reinsurer. It's Amazon and Goldman Sachs, and there's talk of them partnering to sell insurance that's underwritten by Goldman and marketed by Amazon. Remains to be seen. What that'll really end up doing. But Google
Don't forget
certainly
Berkshire
tested out
Hathaway in the middle of all of that.
Oh, absolutely, Berkshire, exactly.
Exactly.
You've got Google who has from time to time bought insurance brokers. Some of that's just looking at data and how they can use data to market and so on. Google had a comparison site for a little while. You look at what's out there, and I don't worry so much that the next AIG or the next MetLife is going to be an insurtech. I think it's probably going to come from reinsurance or finance or big tech or some combination of those. And I think that when you've got an industry that's resource intensive as L&A, but has the potential to drive long-term returns if it's done right, that can be very, very appealing to outsiders, especially when it would be easy enough to trounce competitors on the technology side. So I can't emphasize enough how critical it is that insurers don't fall so far behind that they can't compete with that.
So what advice would you give to insurers starting this new decade?
I think that I'd start by telling them, almost universally, almost no matter who I'm talking to in the life insurance space, you're years behind where you should be in terms of both your systems and your business processes and the revamping of those. I can't really think of an example, other than startups where that doesn't apply. And I can't come up with one, which is a terrible sign. If I think about that, then, you've got some carriers that implemented modern core platforms. So how can this be, right? Well, most of the ones that put in modern core platforms didn't replace all their core platforms. So they still got legacy debt. In a lot of the cases where they implemented a core platform, they didn't change their business processes to take advantage of those new core platforms. So their business processes still need revamping. Even those that did both revamping of business processes and platforms oftentimes didn't then take further advantage of that and revamp their product sets, right?
Right.
How many carriers have you seen that really have taken taken full advantage of the flexibility of a new platform and new business processes and come out with really cool products that appeal to the market? Not really. I mean, even if you look at the Havens and the Ladders and the Ethos, they're getting closer, but they're not, they're still not products that millennials jump on and say, yeah, that makes sense to me. So I think that insurers, the advice I'd give them is get on it, get moving, because somebody's going to do that. And somebody's going to have a tremendous amount of success doing that. And if you haven't done all three of those things, it's not going to be you.
Yeah, and it ties into also the AM Best Innovation Ratings, that you gotta deal with your current business. You've got to somehow optimize that, and in some cases do a little bit of innovation, but you got to start thinking about that future business, because there are a lot of companies that are beginning to think about that future business, because we have a whole different demographic who's going to be buying. We have different technology, we have different market boundaries, different people entering into it, and different channels. I mean, everything is going to be radically different.
Well, and when they started those innovation ratings, I think everybody kind of took it as oh yeah, they're trying to stay relevant kind of thing. But in reality, it turns out, there's something to that. Innovation is maybe a better way to phrase it is lack of innovation can kill an insurer. So,
absolutely. So my final question, Chad, is if you could pick one word or phrase to describe the future of insurance, what would it be and why?
So asking me to say something in one word or phrase is brave,
I know.
Denise.
That's why I said why, Chad.
um, I think if I had to boil it down to a word or phrase, I'd say cautiously optimistic. I've started to see the changes. I need to see a lot more. That's why I do what I do, is to help them, help insurers make those changes. But I am cautiously optimistic.
Great. Well, Chad, thanks so much for your time today and giving your insights. I think that it's been an interesting last few years, and I am looking forward personally to the next 3 to 5 years, because I think we're going to see more change than we've seen in the last 5. And I think it's going to be really positive change if carriers and reinsurers and everybody can really get on board to kind of accelerate in a new era of insurance. It'll be pretty exciting, especially with our partnership.
Well, I'm cautiously optimistic. That's true.
See, I'm always the optimistic one, and you're always the cautiously optimistic one to get that balance. Thanks for your time today, Chad, and thanks for all that, all the insights that you give out to the industry and for our partnership. We're looking forward to the coming years.
Thanks, Denise. Appreciate it.
Thank you.